You know, if you lose a trade in space, it doesn't count because nobody can hear your screams.
Good thing I don't lose.
Frank. We're not lost, are we?
According to the spinning thing in front of me, I have no idea.
What was that?
Sorry, I just got an Edgefinder alert on my Discord.
Wow, nice add-on.
I really don't understand why we're looking for this planet.
Frank, it's because someone told us that there's this planet out there where traders can get funded up to $200,000 in simulated trading accounts. And if you pass, you get the chance to get all your money back. It's really kind of a trader's paradise.
Traders have been searching the stars for a place like this, and it's just too good to be true.
Frank, you just gotta believe. Once you get there, they'll give you 15% off any examination with promo code A1Trading15.
Yeah, I'll believe it when I see it.
All right, Frank, take us out of hyperspace.
Coming out of hyperspace. Now, that's FX2.
That's it. That's FX2. The legends are true. It is as good as they say.
Wow, this is incredible. There's a big giant sign that's got a promo code at the front that says A1 Trading 15 for 15% off.
We finally made it to FX2. Get your discounted access to their trading accounts right now. Link and promo code down below in the description and in the chat right now.
Can you repeat all of that once again?
No.
All right. Hello, everybody. Welcome back to another live stream. We are here for the core PCE number, which comes out, by the way, in about 13 minutes to go. This is actually our last stream of. I want to thank everybody. We had a lot of new people find the streams this month. We've been getting some great feedback and a lot of people becoming regulars on the show. I just want to ask real quick as we kick off the stream, let us know in the chat right now, how long have you been watching the streams? And are you somebody who watches consistently? Do you watch the shows each day? You know, if you're a regular, you know, the structure of the show is we usually start out with, I go for solo for a little bit, and then I'm joined with guests, and sometimes the guests even just take over the show for a little bit, but which is likely to happen today, as we've got a pretty big day with core PCE numbers coming out. Volatility is expected to be pretty good. Well, pretty high. Trayvon, thank you very much for the 4 years. I can attest. I've recognized your name. Adele, Gareth, D. Warner, good to see you guys. Thank you for being here. Started watching about a month ago. That's awesome. Very, very cool to see both new and longer term viewers in the audience around 2021. Very cool. Yeah. With that said, guys, you know the drill. What we usually do during these segments is it is live trading and analysis. I like to usually start my analysis, and I hope other people kind of find this as useful as I do. I like to start my analysis each day with the US dollar. And the reason I do that is because most assets revolve around the dollar. The dollar is like the sun, and all of the other assets, whether you trade currency pairs, whether you trade gold, whether you trade indices, whatever you trade, they typically revolve around the sun. So it's you know, the dollar is really important. So I'm trying to make out. I don't know if that was the best analogy, but you get my point. The idea is that it is a really important piece of information to look at, is how the dollar is performing will set the mood for the rest of the market, I feel. So the dollar index is trading higher here this morning. We found what seems to be a bit of support when taking a look at the daily chart. You can see we've had this potentially forming our second green day in a row, though that is a big potential keyword there, because we do have, like I said, some volatility expected in the next 10 minutes with core PCE numbers coming out. Let's go ahead and set the stage about what it is and why that matters. So inflation as we've talked about many times on the show, is a really important driver to markets, especially in the last year or so, where you go to the store and prices are higher, and it's getting to be really quite painful to go grocery shopping, right? I almost have to like psych myself up every time I go to the grocery store, like you can do this, like come on, you got this, because those prices there's some sticker shocks out there. I think I used to go to the grocery store and spend like, I don't know, maybe $50, $60, $75. I mean, this is, of course, for a while I was, living solo in college and things like that. Now I have a wife, so my bill's gone up a little bit, but a lot of that increase in costs, I'll go to the store and spend $100 because it's, spending for the two of us. But some of the same shopping items are so much more expensive. And why is that? Well, 2020 set us off into a massive increase in the money supply. Everyone needed stimulus checks and everybody is paying for it now, right? Everybody thought that was like, oh, we could use some free money. No such thing in this world as free money. Printing money means you pay more at the store. Okay. So if you get incentives and whatever, it just comes back to bite you somewhere else. That's just the tough part about money. It is tricky. But yes, inflation numbers, regardless, are obviously a crucial subject for not just the consumer, but because it is so impactful to the consumer, it's impactful to markets, right? If the consumer is strong, that's going to make a strong economy, right? Because if the consumer can go out and buy things and borrow money and stimulus through, activity, right? If it's possible for that to happen, then the economy stays strong, and hence the US dollar would stay strong, and vice versa for each and every country, right? You want a healthy level of inflation, but you don't want too much inflation, because too much can actually crush the consumer. And so what we've seen, now that I've painted the full summarized view of inflation, we are looking for further inflationary decline. We want to see those numbers coming down. So far, I would say, in my opinion, as I've made it clear, I think the inflation cooling trend is going to continue. And so I think we're like right here. I think we're not necessarily, now I should say, I don't necessarily think inflation is just going to be a straight line down. There is likely, as Frank has pointed out on some of our shows, there's likely going to be some divots along the way. And so today we get another reading of inflation. And that is why it is so important to markets to see that this core PCE number either comes down or doesn't spike too much. That is pretty much what we are looking for. And so here's my base case for today's trading, okay? Pops on the dollar, I'll be looking to sell if we get up into this upper limit, right? 104 on the dollar index. So is that going to pop right away up into that area today? Unlikely to do so, as we have already seen many measurements of inflation for October. We saw CPI and PPI come out, and we're talking a lot of fundamentals, guys. I know this is a very fundamental focused start, so I apologize if you're more of a technical trader. I do get to the technicals, but people are sometimes surprised when they hear me say something like, my analysis is like 80%, 75%, let's call it, fundamental based, and then 25% just for the execution is the technicals. I think people get way too caught up in technical analysis and make it something that it's not. It is a really simple idea. With technical analysis, I am just trying to gauge direction and find not necessarily predictive magical entry points, but points where I can take proper risk management positions. That is all I'm using technical analysis for. I am not using it to predict the future. I'm not trying to read the tea leaves and fortune tell with your palm or anything like that, right? I am keeping my technical analysis really simple. Where is momentum headed? How do I find an entry that makes sense, pulling back to an area that again, I can get a good risk reward. So when you take a look at the euro, it's pretty clear that if that dollar continues to go down, that the euro looks good, right? To the upside. Until something changes, that's going to be my bias. However, I do actually have some setups that I like a little bit more. I spoke on this yesterday, but let's follow back and see if we can find some trade setups based on the Edgefinder's bullish or bearish readings. Now, let me clarify something. The top setups algorithm considers lots of data. I just went through a mountain of economic quick facts, right? Mostly focused on inflation. But there's also labor statistics you have to understand, interest rates, economic numbers like GDP, the trend momentum, seasonal trends, retail sentiment, commitment of traders. what you can start to see is that analysis can be very, very in-depth very quickly. So my point with getting to that is this is why the Edgefinder was born. Frank, my trading colleague here at A1 Trading, we've been trading together for many years now. We built this tool together, and we have developers. Him and I have been designing this thing for a while. The purpose of this tool is to assist in that fundamental mountain load of work by automatically pulling the data and computing bullish or bearish setups. So when I look for setups, I don't just go wandering around charts and saying, well, maybe I'll pick it up here or short it here. I don't do that. I look at the economic data. I look at the trends that are going on in markets, the real drivers, not just pretty paintings on charts, right? We do use technical analysis, and I'm not trying to disrespect technical analysts, but I am trying to say, do not overhype technical analysis. Understand what moves markets is fundamentals. And so when we look at this, I like gold on the bullish side. I think there's a really good story for my gold friends out there for gold to continue. We've been bullish on gold for a little while now. Now, granted, back over here, I will point out my errors. I'm not just trying to tell you when I was right, but I was bearish on gold. Although I didn't take any shorts because price action didn't let me, I did flip my bias and become bullish as we started to pull back in this region. Now, as we look at gold today, is there more upside? Because again, I point this out often on my videos, on my streams, on my shows. We talk forward looking. I don't like to only ever point out the prior data that's happened. Hindsight is very annoying to me as an analyst, as a trader. You know, you can't trade based on what's already happened. You got to trade going forward. And in my opinion, I state my opinions always. I will be right sometimes. I will be wrong sometimes. That is my promise to you as a viewer. You will get my personal opinions. You'll see my trades, all that good stuff on our shows. So as this price pulls back, I think there's upside to gold. Now, the debate starts to become, at what point do we look for entries? Well, I'll tell you where I'm looking for it. I like the 61.8% retracement. It's about a 2016 level, somewhere in this region. If you heard me speaking yesterday, I said 2014 to 2016, somewhere in that region. Looks pretty attractive, in my opinion, for possible pullback buys on gold. Now, not only that, you also have Edgefinder confirmation. And remember, I mentioned this earlier, I don't just wander around technical charts and take trades based on support and resistance. That is not what I do. I use the Edgefinder because the Edgefinder considers economic data on my behalf. Now, of course, I like to look through the data and understand it more thoroughly, but I almost don't have to. I can really just look at the Edgefinder's bullish or bearish readings, get a general idea, and then I can go look for technical setups in the direction that the Edgefinder provides. That is my trading strategy in a nutshell. The Edgefinder is a algorithm that we have written and built from scratch using data automatically pulled in and then interpreting that data bullish or bearish. It looks at lots of factors. All that to say, I should just mention this before we do get into the news. The Edgefinder is currently, this is the last day, by the way. I've got something exciting for you. If you've been watching, we're going to do it one last time. And this is the last time for the entire year and likely most of next year. We're going to be doing 50% off the Edgefinder. If you would like access to the 50% off discount that the Edgefinder's got. We did Black Friday this month, and this is the last call. So for those of you who have been trying to get access to the Edgefinder, this is your chance to do so for the absolute last time. 50% off is in the chat right now. If you click this link, it will take you to a direct message center where you speak with some of our team who is trained to use the software if you have any questions. And if you click that link, like I said, you can get the 50% offer on the Edgefinder now. If you click that link, send us a DM. That is the last call on the sale for the entire year and likely much into next year. So take advantage and again, get yourself a discounted copy before those end. All right, guys, we are coming into the news. We've got 30 seconds before core PCE. Don't go anywhere. Today is going to be action-packed. We've got guests coming on to interpret what we see here in just about 15 seconds. And again, it should be a very active trading day. I got to show you some of my trades as well in just a bit. Coming in. All right, let's see. Numbers should be coming in. We'll see if they do have impact today. We're looking at gold currently. Numbers should be coming in now. All right, GDP for CAD came in 0.1%. And let's see what we do get with core PCE price index. Still pending here, at least on Forex Factory. 218K, by the way, as expected on the unemployment claims side. PCE price index still pending here. And again, based on this number, we will be looking for possible trade setup shortly after. Still waiting for the number. There it is, 0.2% as expected, guys. So what we saw, this is, I would say, no surprise is good news for the dollar downtrend, okay? If you're a dollar bear, I would say, this is my first reaction, I haven't even looked at the charts, likely that this is okay. It doesn't impede upon anything with the dollar downtrend, and it doesn't necessarily crack the S&P uptrend either. And so, yeah, so that's what we're kind of starting to see. We are starting to see perhaps the dollar roll over here just a little bit on this news. Now, again, why? Well, bulls might have been hoping that we got hotter than expected PCE numbers, wanted to see that number pose a little bit of a juice to this dollar trend, right? Higher inflation numbers. Why is that bullish for the dollar? Well, think about it. High inflation, Fed's going to rate hike or hold rates higher for longer. Both of those scenarios, very bullish for the dollar index as, of course, interest rate denominated products or instruments become more attractive, bonds, things like that. And the dollar, of course, gains in demand. It also just shows economic strength, which of course can be positive for the dollar. Okay, so how do we interpret that? Now, a lot of people might saying, well, Nick, where's the spike? There's no spike on this red folder, and I was hoping. I'm a spike junkie. Anybody a self-declared spike junkie? Is anybody a spike junkie? No judgment here. No judgment here. But the reason you're not getting a spike, let me clarify, for sometimes people get frustrated or confused why there wasn't a big move. I'll tell you why. News is only as volatile as it is surprising. Remember, we got the forecast already. We knew what approximately analysts were expecting for this core PCE number. It was 0.2%. So markets were saying, okay, we're probably gauging 0.2%. Now, if it had come out 0.4% or 0.5%, then you get a spike. If it had come out 0%, then you get a spike. But it came out as exactly as people had kind of forecasted to be on average. And that, my friends, is why you don't get the big spike here today. Okay. Now, no big spike does not necessarily mean no trading setups. In fact, it actually, in my opinion, it continues to offer a bullish catalyst to gold. I like gold even more, I would say, if it pulls back to our setup that we discussed earlier on the stream. There's 623 of you guys. If you do, if you would just help me out on the stream here real quick, help the show out, hit that thumbs up button, hit that subscribe button. I would very much appreciate it just to help out and get the YouTube algorithm to get some more viewers in here hanging out with us on this core PCE trading day. Now, again, I want to clarify something. The spike may not have occurred, but the volatility could still be there for the remainder of the day. Remember, like I said, if you're ever wondering why was there no spike, news spikes are only as big as the news is surprising. If the news is not surprising, there's not a big spike to be had. Okay, and by the way, guys, it looks like we might have something here forming on the pound USD. Check it out, pulling back to the 38.2%. 1.2625. I've illustrated this area is a level that I personally like for possible longs. If we come into that level, there's a good solid chance I'm going to take this trade. Now, I'll clarify something. Why pound USD? Well, not me clarifying it, but let me go through the Edgefinder's findings with you guys. So we get a score of +5. A score of +5 is considered on the Edgefinder bullish. 5 or higher is a bullish score. What that means is that we have confluence, not technical confluence, not, oh, well, the MACD and the RSI and the trend line. No. That is one side of the trading side. But what I think most traders miss is the fundamentals and, of course, the sentiment in the markets. Now, we can look at confluence based on the blues and reds here, right? Go with me here for a second. If you're newer to the Edgefinder, I know it might seem a little confusing at first, but it's really not. And again, this row tells you everything you need to know. So the score is +5. That's overall considered bullish. That's the output, right? Output is on the left here. Okay, going to the right though, check it out. COT bias, not so favorable, meaning that the COT big money seems to be a little bit more tuned towards the dollar than the pound. Okay, retail sentiment is 0. Well, what that tells us is that basically retail traders are 50-50. There's not really a big swing there. Seasonally, during the month of November and December, we expect to see the pound rise. Okay, so check 1 for the bulls. Quite literally, our algorithm does that. Next, trend. Trend is overall to the upside. Give us another point for the bulls. Economic numbers, GDP growth, PMIs, retail sales, holding in there just fine for the pound compared to the US dollar. Inflation statistics. Inflation is cooling in the US. That would be dollar weak. And inflation might be a little bit more cooling in the US than it is in the UK. Give another point to the pound. Labor statistics. Cooling in the US, that's going to really draw on that and give us some points for the pound. Do you see how that kind of worked out? Like it was really, it can look daunting at first, but the Edgefinder basically computes, it pulls all the data in, it computes it and gives us a bullish or bearish output. Interest rates, basically not a huge preference one way or the other. And so now we have the pound USD as a bullish setup. That then, I start my analysis here. Then I go take a look at the chart and I say, does this actually set up nicely on a technical trade? I love it. I really like this setup. So a pullback to the 38.2%. We've got some consolidation here prior to a big breakout. I like the technicals as well as the fundamentals. Does that make sense? If that thought process, if that made sense with you guys here in the chat, do me a quick favor and just type yes. Let me know that made sense, that walkthrough, if that was helpful to you with how we interpret pound USD, not just from a, oh, the chart's moving this way or it's hitting a support level. Anybody can do that. If anybody can do it, is that really ever going to produce an edge? Not really, right? You're not going to be able to, do really well in markets just doing exactly what everyone else is. Again, now I don't necessarily think that support and resistance is by any means useless. I use it all the time in my charts and my trading. I'm just saying that you kind of have to couple it, I think, with some more work. And that more work, in my opinion, is adding some layers to your analysis, whether it just be understanding sentiment in markets. What are the big money doing? What you see what I'm saying? Like maybe multi-time frame analysis. You have to add a little bit of layers to it. Okay, cool. Thank you guys, by the way, in the chat for giving me that yes. Just from the content side, it does very much help me just to know that what I said made sense. Sometimes I go down an avenue and it doesn't resonate with people, and then I just I want to know that what I said, it actually hit. So with that said, I do also want to remind you, like I just said, today is the last day, so I apologize in advance. I may be a little bit annoying about that. I just want to make sure that people don't miss it. We're doing 50% off today for the Edgefinder, and that is the final day. So it is the last day of the sale. If you're somebody who is considering getting the Edgefinder, let me be very transparent. 50% is the lowest discount we ever offer. We do not go lower than 50%. And this is the last time that it will be made 50% for the remainder of the year, if not well into the new year. We very, very rarely offer this, but we are doing this for Black Friday. And today is the last day of the sale. So get yourself a copy. Also, by the way, same thing as if you do already have the Edgefinder and you don't already have access to our VIP, you may want to get access to that as well. You can see all the trades being taken by myself, Frank, and Ivan. Come join us in the VIP Discord. That is also half off. And like I said, I recognize that I'm being a little bit annoying by reminding everybody so much. I just don't want people to miss it. So take advantage. All right. So let's keep going here for a moment. And I like pound USD. I like gold on a pullback, but it's not quite ready. Now, by the way, gold gets a more positive score. We got a +7 for gold. And we're scoring some extra points on gold because the COT data was a little bit more favorable than on like the pound. And so, as I mentioned, what you'll notice here, though, is that this one is not quite ready. So now this is where the technicals do shine. Even if I have a bullish or bearish setup, hard on the technical side. I didn't mean to go hard. Oh, where did I just go? It just disappeared for a second. Sorry, stream software glitched for a moment. Anyways, I went a little hard on the technical side. However, the technicals are incredibly valuable as well, because what technicals do allow for that fundamentals do not allow for is the following. Technicals allow you to build a little bit better of a risk reward profile. You can enter into a position and have an idea, a clear set plan as to where you're going to get out of a trade if you're wrong and how you're going to manage it if you're right. On top of that, what do technicals do that fundamentals do not? Technicals tell you when and where. Fundamentals only tell you direction. Now, I guess you could make an argument that on a longer term basis, fundamentals may have kind of entry signals, sort of, but they're not as clear cut and defined as what technical analysis can offer. That's why do you have to have just one? You can really use both, and I like to do so. So again, what I'm looking for, pullbacks, setups here in the continuation of this uptrend, but we're not quite at the point just yet where we can really enter into that trade. At least for me, that's not what's going to be set up. I do want to take a quick look at the indices, and this is the 30th day that I am still in my S&P 500 trade. I just wanted to start by taking a look at the NASDAQ, just because it has a really bullish reading on the Edgefinder here. And I want to take a look at the daily chart real quick. So again, this is where technicals are important. This is not a chart that I want to buy. Now, am I still bullish? Yes, I think it has more upside, but I don't think it's as easy of a trade as some of the other things that I listed, like pound USD, etc. So for me, the goal would be waiting for that pullback and seeing if I can get into the trade with a more appropriate risk to reward profile. Now, a trade that I am already in and still holding is the S&P 500. This trade has been 30 days consecutively that I've held on to this trade. And, you know, some people might look at that and be like, so is that like a normal trade duration for you? Obviously, in terms of P&L, this is my biggest trade of the year. It's not normal for me to have those sort of movers. And also the time duration that I've been in this trade is incredibly abnormal as well. Usually I'm a short-term swing trader. So for me, the average trade is a couple days or less. This trade has just been one that you can see there's hardly any sell-offs. So there's been, I trail stops, right? So my stop loss trailed up to this point. I've been holding on to this trade all the way through, and I've moved my stop loss each time we've put in a low. I moved my stop below, price exploded higher, and there was no significant sell-off, right? So let's say I did move my stop loss at some point up into this region, but we didn't stop out, right? So the trade just kept going again. And now we're at a point where I've trailed my stop yet again up to this level here, and I'm still holding so long as we don't see that break, because I like to use a method that I have called, I don't know if I came up with it, and it's really not that creative, but the TTF strategy is what I use. It's the true trend following strategy. And the reason it's true trend following is because, in my opinion, true trend following doesn't have, the trend does not have a predetermined end point. So when you take a trade and you put a take profit on your trade, I would say that you could be following a trend, you could be trading in the direction of a trend, but I don't think that is true trend following. True trend following means waiting for that trend to completely reverse before you get out of it. So true trend following means I don't take profits when the market's moving up. I take profits when the trend falls apart. So if that does occur, that's why I call it true trend following, is because, again, I'm not predicting the end of this trend. I'm just riding it until it shows me that it is truly ending. Of course, sometimes easier said than done. There's certainly plenty of times where a trade moves against me and then goes without me. So, it's a little tongue in cheek, but you get the point. It's my phrase for this style of trading. But yeah, we are letting this one run as much as possible. And this one has been going for 30 days now. So we'll see if it keeps going. If it does, wonderful. If it does not, I'm ready to let it go. At this point, it's been going for a long time. So we will let it do its thing. Now, guys, we're going to be transitioning the show. I'm going to be bringing in our technical traders. We talked a lot of fundamentals. So to balance me out a little bit, we're going to be bringing in Miko and Marco to talk technical trading setups here in just a moment. So as we prepare to do that again, following this core PCE number that did come out, we're going to roll a quick break from our sponsors here that make this show possible. And then after that, we'll be back with Miko and Marco. Check it out. Frank, are you really trading right now? We are literally traveling through space.
Yeah, I mean, thanks to Eightcap, I can trade at any time and anywhere, even in space. And I get a free Edgefinder with it too.
That's pretty cool, but honestly, there are so many other brokers that I think are better.
That's it.
I'm ejecting you.
All right, Frank, let me back in. Come on. I'll sign up for Eightcap, I promise.
Don't get lost in space. Trade with Eightcap. If you'd like more information about how you can get a free Edgefinder, click the link that's in the chat or description to speak with one of our representatives and sign up with Eightcap. There's some great free perks available. Check it out down below. Frank! All right, guys, and we are back with the Technical Thursdays crew. It is Miko and Marco. How you guys doing?
Hello.
Good. What's up?
Not a lot. And following this PCE number, we've got a little bit of volatility, though I think some people in the audience were hoping for a little bit more of a spike. I made sure to reiterate, as you guys know, that usually, news spikes that are lasting, the big green candles, the big red candles that do occasionally come along are usually due to unexpected large moves in the market. We didn't quite get that today. We got pretty much, you can see, as expected, the 0.2% month over month for core PCE. Despite that, though, we do have some pairs that are moving really interesting. I've got gold pulled up. I know some of the dollar crosses look really interesting. So I guess with how this usually goes, we just kind of go around the room. So I guess we'll start with Marco. Marco, what's on your watch list here today? What's the latest, and did this news do anything in terms of setups for you?
Sure. So on this 1 hour chart for EU, it's looking like it's going to push down a bit more. So I'm seeing this pattern, which is a descending channel, and then this impulse to the downside. Nice big push, nice momentum. Again, news candle definitely just by the size of this huge wick on this 1 hour chart. What I'm looking for is this to continue down a bit more, and then I would be looking to sell right here, or possibly give me a break and retest entry, but I need a nice break of the low. So I'm looking to sell EU, and then EJ. Let's take a look at that one. EJ has been descending in a larger channel, so I am expecting it to push up actually, but I still need to see evidence. So I need to see a large push to the upside, which would look something like this, and then I would be looking to buy. So a bit more patient on EJ. It can still continue descending for a long time, so still continue showing this sort of a pattern. Aussie US dollar, well, nothing much. I mean, I'm seeing this push right here, but overall it's kind of stuck in this general price action. So I think I would need to wait for a bit more momentum going to the downside to be interested in any sells. AJ, similar to EJ, we had a descending channel, but it actually did break out with this push up. Now it retraced. So I'm seeing if potentially it will continue up, and then for me to buy. So this one is currently on my watch list as well. And then we have the pound. Pound, kind of a similar story to the Aussie US dollar. Again, kind of flat right here, and then this push is not that big, especially on the pound. I want to see more momentum. So I want to see a large push on the pound. And then we come to NJ, which is just very, very flat, very, very range bound, and definitely not on the watch list. So I'm looking to sell EU. EJ, I'm looking to see a push up. AU, maybe a push down. AJ, push up. Pound is too flat, and NJ is too flat as well. So some potential, but not the best. I have had better days.
Okay, fair enough. Yeah, I know some days, Marco, you jump on here and you've got like 3 charts that you're like, well, I'm about to trade. And the other days, same with everybody, right? Everybody has those days where they have a lot of setups. And sometimes what I find is a lot of times I have a lot of setups, but they're not at entry points. And so it ends up being a lot of waiting. I feel like maybe that's relatable. Miko, what do you watch on any? I have to ask you about pound USD off the 4 hour chart. What do you think about that setup? I'm looking at it a little bit myself, but I want to get your thoughts.
So yeah, with pound USD, I have been particularly bullish on the pair, but we've come to some prices where I'm starting to back away, as in it's not looking attractive to buy anymore. Not necessarily looking to sell yet. There's some other dollar pairs that look interesting for me. Pound USD is not necessarily on my watch list at the moment, but when we're coming to some areas, particularly 1.26, 1.27, where we see a lot of friction around here, a lot of rejection, and I'm wondering maybe if this bullish trend is going to have a breather or is it going to reverse? I'm not quite decided yet. I'm not really looking to pick anything with pound USD. All I can see is that we're in an area where we might start to move sideways a little bit, maybe have a bigger retracement, or maybe reverse even. So I'm kind of waiting to see how things develop. The bullish trend as well, we had some really nice pullbacks, but you can see we've kind of been losing steam a little bit with these bullish pullbacks, and now we're starting to gain some bearish momentum. So I wonder, is it time for us to reverse? But I'm not confident with any setup at the moment. But with Aussie dollar, I really like this one to the downside. I'm starting to potentially shift my bias from bearish dollar to bullish dollar, but not quite just yet. In terms of Aussie dollar, I do like the shorts for this one. We're coming to a very attractive area of confluence where possibly we could be seeing the next lower high. We've got one over there, second, third, could be seeing another one form in the daily chart for a big move to the downside. This one's been bearish for quite a while. Bigger picture, been heading lower as well. So I'm waiting for some shorts here on the Aussie dollar, and hope you can find some sell setups probably for next week. I'm not too sure if anything this week, but I do like this one heading to the downside. So yeah, I might be changing my bias on dollar, not fixed yet though.
Okay, fair enough. And I think the dollar, there is an argument where if you do start to see some breakouts, some change in momentum, if nothing else for the short term, I've got my 4-hour chart here. You've got very slight, oversold kind of breakout potential here, where you do have this downward trend, price breaking out here, could be due to maybe retest the top of this channel. Not necessarily a trade that I love personally, but at the end of the day, there's possibly some room for this thing to pull back. It's definitely sold quite heavily for some time, and even in these moves, especially if you can spot them pretty quickly, the reversals can be pretty good. I would say personally, for me on the dollar index, a real potential bullish signal would be like a break over 104. 104 was like this big level of support here. It came back and retested at resistance here. So to me, what would be a potentially like bullish signal in the short term for the dollar from a price action standpoint would be a break of that 104 level. So I think it is worth mentioning and worth watching the dollar index here. I think one thing also to note, even though you guys are primarily on the technical side, you do also make note of news events and major catalysts that could cause stirs in the market, because at the end of the day, a big news event can cause some wonderful technical moves as well. Right now, a little bit of a struggle is that in December, we don't have a ton of market shaping news. Now we do have like your NFPs and things like that, but no major really live Fed meetings or things like that, which by the way was really what kicked off this entire downward trend. That was the day that we had FOMC and Jerome Powell sounded really different tone than what he had on the dollar. So or on the inflation story. So really interesting to see how that plays out for the remainder of this year. And I also want to ask, Marco, do you take off? And I think maybe a lot of people in the audience are wondering this as well. Do you stop trading at any point in December? And at what point, if you do?
So December, I have found from the backtesting that like after Christmas, usually it's very flat, especially on the 1-hour chart. So after Christmas or somewhere in the beginning of Christmas, you get something like this. Right, it's super flat. For me as a trend trader, it's not very good. The volatility is not high and the liquidity is not high either. But for range-bound traders, it might be exactly what they are looking for. So I'm not stopping trading, but I am being a lot more patient, and I'm looking for those really high probability setups. I'm looking for really strong trends. But up until, I would say, Christmas, I'm definitely being active and trading as usual. What I found, certain pairs work better in December. For example, Euro and US dollar tends to have some nice Decembers, while let's say Aussie US dollar or the pound US dollar usually have losing trades in Decembers in the, let's say, last 10 years. So I know which pairs to focus on, and I know which pairs to keep my eye on. So I just readjust the plan, but I continue trading, continue watching the charts, forecasting, same story.
Yeah, that's awesome. And I like the way you answer. Usually, Marco, when I ask you like a question like that, what I love is that you usually lead your response with what you've actually found in your testing. And I think that that's a really important point for not just our discussion, but for people who are listening. Notice that, you know, when you ask people like Miko, Marco, like, what do you think about this? It's not like a gut call. It's not like a, you know, like, oh, the market always does this. No, it's like actually employing some level of game plan to it. Like, oh, I've tested this and I know that these pairs do this, and the market tends to do this at this point. Like, that's what real trading is. People love to kind of they love to kind of trade on like trust me bro logic, you know, a lot of times. So you can't be out here saying trust me bro about making huge financial decisions as a trader. If you're going to do this for long term, you got to have responses like Marco and Miko. Miko, so same question. What do you think about trading in December? I know you're more on the 4-hour swing trading side, day chart. I'll throw my answer in there with it too. As a swing trader, I typically take less trades, and usually ends up being that if I'm in good trades, I hold them through the period and just kind of let things run. But I don't look to take a bunch of trades after like December 20th or something like that. But what about you? What do you think?
Yeah, I mean, I'm pretty similar as well. I mean, coming into December, I just tackle it as same as I do with every single month. Haven't really noticed any major differences in my trades in December. However, there is that one last week of December between Christmas and New Year's, which I probably will not trade and take off, because normally the market is quite dead during that last week of December. So the first 3 weeks to like the 22nd or something like that, I'll be trading, but that last week I will not trade, and then I'll come back 1st of January, because coming to the new year, the markets are moving pretty well from my experience. The 1st of January till the whole of January is looking very a lot of volume. So that's where I kind of focus. But that last week I'll take off.
Yeah, they call it the January effect for a reason. You know, January, a lot of big money has to kind of reposition towards the end of the year and then enter back into or create new positions in the beginning of the year, especially on like the, hedge fund side, for example. They might be closing out. Tax loss harvesting is a big thing towards the end of the year in the United States. I know for a lot of funds, I'm not actually sure how that works in other countries, but the point is they sell a lot of big positions or losing positions actually. And what's a noticeable trend right now is that the winners of the year on the stock indices side have been the NASDAQ, and the losers, for example, might have been like the Russell or the Dow Jones. And what's interesting is that kind of recently during this tax loss harvesting period, we've seen the NASDAQ do better, even though it's already been the better one. Like the winners continue to win and the losers are getting sold for tax loss harvesting. Some arguments could be made for maybe in January, there's a little bit of a run for some of the other sides of the indices. But that is, of course, the indices side of things. We could go into a rabbit hole with that, but I don't want to keep you guys any longer. I appreciate you guys for coming on the show here today. Before we go, let me just let everybody know in the audience, these shows, I think, are made so much better by the guests and the types of commentary that people like Miko and Marco add to the conversation. And if you would like more from them, They both have their own YouTube channels that I highly recommend you go follow them, go find their Telegram channels. They offer a ton of free value, and that is the whole point of our show, is to offer a ton of free value to everyone and to bring traders around the world together to kind of build a little bit of a network here. So Miko, Marco, thank you both for coming on the show, and your links are both in the chat for people to find you.
No problem.
Appreciate it.
See you next time. Goodbye.
See you guys. Always good to have those guys on. Again, technical traders at heart, and I love having a good mix of different people. Our next guest, who I believe is coming on in a few minutes, is Kenzo, and some of you guys probably know Kenzo. He's from South Africa, and he is a fundamentalist to the core, and I really appreciate listening to his commentary as well. While we wait for him to show up, we've got gold here pulling back, and interestingly enough, I think there may be a little bit of a setup now. I like gold quite a bit, but I've got to wait for it to pull back into a level of support. And really, the issue that I'm finding here is that gold doesn't really have any horizontal support, which is what I like to use, because it's a little bit easier for me to gauge a stop loss based on a horizontal level rather than what I mean in contrast to a diagonal level, right? Yes, you have this trend line, but I'm not a trend line massive advocate, because trend lines can be drawn very different ways based on who you ask to draw them, right? So trend lines are a little bit more subjective, I would argue, than just a straight up horizontal level of support, right? Nobody's going to debate whether or not on November 28th this was the high point, right? That's a horizontal level. It's clear as day. So that's my point, is to show you that I like horizontal levels a lot more. So I will probably have to wait here on gold. If you do get a push down to the 61.8% retracement, I like that for a possible continuation, and possibly next stop could be a retest of the highs. Now, this red zone, by the way, that is the all-time high for gold, and will be very interesting to see if we can get back up there. Like I mentioned, our next guest, Kenzo, he will be coming on to take over the show for a little bit. And as he does take over the show, I will ask him definitely to take a look at gold for us. And I know he'll do that anyways, because he, similar to myself, we both like talking gold, dollar, indices, currency pairs. You'll get it all with Kenzo, and he's coming up next. But before I do pass the show over to Kenzo, let me just also say something. Just a reminder, the Black Friday sale is ending. Today is the last day. If you've been somebody watching the show for a while, you've seen us using our software tools, or you'd be interested in getting access to our signals, currently they are 50% off, and today is the last day to get that discounted price. 50% off our software tools or our signals. All you have to do to get access to the 50% off price before it ends today is send us a direct message here. You'll be connected with someone on our staff who can answer any of your questions and can help you get access to the tool. It takes like 5 minutes. It's a browser-based product. It's very easy to use. And again, if you've seen it used in the videos and on the shows here, take advantage of that half off sale. The way to get that half off, by the way, is just message us the word 50. I don't even know if it's a word, the number 50%. If you send us 50%, we will honor that price for you. And today is, like I said, the last day to do that. Okay, so take advantage. Click the link in the chat right now or at the top of the description. And now we'll take a quick break. We'll be right back, and Kenzo's going to take over the show from here. Check it out.
All right, Frank, I'm getting a reading here.
Coming out of hyperspace.
Looks like there's a strange moon up ahead.
That's no moon. That's the Edgefinder.
Hi, Kenzo. Can you hear me? I hope you can hear me. Kenzo, can you hear me? Well, it seems like Kenzo might be having some technical difficulties. Hold on. We'll come back to Kenzo in just a moment, guys. Sorry for the technical difficulties. We'll figure this out. Maybe Kenzo, if you can hear me, you may just need to refresh the browser and rejoin the call if you're having some issues. But we will come back to Kenzo in just a second. I think he might have had some just some technical start issues. As I prefaced with Kenzo, he is a fundamental and technical trader similar to myself. And if you like that sort of commentary, I highly recommend sticking around with Kenzo for a little bit. Like I said, he, in my opinion, of our guests, is the one that is the most similar to my trading style, maybe outside of Frank. Frank, of course, him and I have traded together for a number of years, but Kenzo has a really fundamental and technical basis to his analysis. And so we'll try this again. Let's see if we add Kenzo to the call, if he can hear us this time. Hey, Kenzo, can you hear me? Oh, I'm glad you can hear me, but we don't.
Yes,
think we
I can hear you.
No, there you are.
Yes, I can hear you.
Hey, Kenzo.
I think I
okay.
switched my microphone. Sorry.
Oh yeah, no problem. So Kenzo, I was saying just a second ago that we'll let you have the floor for a little bit. You've been here for quite some time, so we'll give over the show to you for a little bit, if that's okay with you. You can take over, and I'll come back and join you in just a little bit.
Okay, thanks.
Okay, sounds good.
Okay, good evening, guys. On my side is actually in the evening, so I hope everyone is doing great. So what are we going to do today? We're just going to check what's really happening. We had GDP yesterday, so we saw the market was a bit positive. So that's why we see the market trying to push up. I think it's today, right? I mean, we received GDP, which was a bit positive. So what do we see on a dollar index? We can easily see that even the market is responding to that. We can easily see that DXY is trying to push the upside. You can see that, yes, even though it's trying to push the upside, the overall structure is still actually pushing lower. We are on a downtrend on the dollar. You can see the market is actually pushing lower. So that it's actually good because the dollar is losing some momentum, and that it's good because they're not going to increase. There is a chance that they're not going to increase the rates on the next meeting. Plus, I heard that they might cut the rates, and that it's actually good if they're going to do that. So currently, we are going to see other pairs which are against the dollar gaining some momentum. But for now, since we see dollar index pushing up, for now, we might see the market trying to push a little bit against other pair as the dollar it's gaining some few momentum. But I still believe that we might see another continuation of that sell. So on the comment section, you can just let me know which pairs do you want me to check. So I already checked a dollar index. So what I'm going to do here now, I'm just going to jump straight to gold. Gold, I saw gold, it was a little bit selling. As you saw, the dollar is gaining some momentum. So which means other pairs which are going against the dollar, they're just going to feel the pain. You can see here on gold, we see that the market, it was pushing to the lower side. But for us, it's actually good because the market is being pushing to the upside. So we need to see that reversal. We need to see a smaller reversal so that we can continue buying. But on gold here, since we saw a breakout, the area that we can use as a support is around this level or maybe around that. So for us to say we need to buy, it means we have to see a stronger sell before we see the market pushing to the upside. Or maybe the market has to break this resistance, then we can continue with that buy. Or maybe the market will try to give us something as a structure, then we can use that as a continuation of a buy. But with this bullish, stronger bullish move there, I'm expecting a nice reversal, maybe just to give us another push to the upside. I don't think maybe there are a chance that the market will just fly without giving us something, sort of a rejection. So on the comment section, I see GBP USD, Euro, AUD USD, and oil. Okay, USD JPY, USD CHF. Okay, let me check that. So I will start with what? Let me see. I will start with Euro USD and going straight to GBP USD. So this week we had so many economic news which were not really aggressively they did not really have high impact on the market, but they are very important. We have PMIs, GDP, and unemployment claims, which is it was today. So all those economic news, they were pushing the market to go sideways, especially on the likes of Nasdaq and the other ones. So now we are on Euro USD. If you still remember, Euro USD was pushing to the lowest side, which it was actually a downtrend. You can see the market was downtrending. So now the market is uptrending, which means we are supposed to look for a continuation of that trend, and we are going to continue doing what? We are going to continue looking for buy positions. I hope you understand that. So now on Euro USD, I see that the market created a very nice structure. What we see here is we saw a nice reversal because of that GDP. Yeah, I think it's GDP. I think we had GDP. Sorry, we had unemployment claims, not GDP. So we saw a smaller reversal. But what we have here is there is a structure around this area, actually a support area around this area, around that zone. But as we are on an uptrend, I'm just going to continue buying the market around this area. That's why you see that buy pending order there. Or someone can say, Kenzo, I also see something like that. Yes, that can also work, but just remember it's inside our trend. You can also use this horizontal support. It's also fine. Or maybe the market will try to come around this support area before we see another push. But where we are now, I'm expecting to see a very nice bullish move. On top, already the market created something. We're going to use that high as our potential resistance. But the market can still break that, you see. So another one is GBP USD, okay? So now on Euro USD, we are looking for a very nice bullish move. But what you saw there, on DXY or dollar index, we saw a nice reversal of the dollar. It was pushing up. That's why we saw other pairs reversing, and that was good because now we have a chance to continue buying our pairs, our Euro USD pairs, GBP USD. What's really happening? Quite similar structure with Euro USD. Previously, the market was going down very nice as a downtrend. Now we have a very nice uptrend. But since the market was very aggressive, pushing to the upside, you can easily see that, yes, the market is pushing up, but we don't really have a proper support. Yes, it happens. Most of the time it happens. Why? Because the market is aggressively pushing to the upside, or it's aggressively on a bullish momentum. So most likely the market will create this aggressive push, but most likely just know that we're going to get a nice reversal going further. We're going to get that reversal. So, but where we are now, we actually have a nice smaller support where I think the market might continue going up. So let me try to zoom there. Maybe you will see what I'm trying to talk about. Let's zoom that. Yes, yeah, something like this. So if maybe I use a smaller time frame, we'll see that this area is very important currently. We also have a nice buy pending order. If the market respect this area, we expect to see the market pushing to the upside. If not, it means the market can actually push even lower. But if it's going to push lower, just expect the market to give us a proper structure of that uptrend. Currently, this is aggressively pushing to the upside. If we see a break here, it's not like a change of a trend. Maybe the market wants to correct this type of a bullish move so that we can get a nice push to the upside. This what we see currently, it's like seriously aggressive. The market won't keep up with that. So one way or another, we're gonna get something like that. So I'm still bullish, but reversal it's also needed. This buy it's a bit stronger, so we need to see some sort of reversals. But let's see what might happen on other pairs. USD JPY. It was, let's see, another one is what? Euro AUD USD. Okay, I'm gonna check that also. So now we are on USD JPY. What's really happening on USD JPY? USD JPY, it was, let me just go on a daily time frame. I think this structure, it has some like serious swings. So what's really happening here is we are actually on an uptrend, and the market seems to be going to continue with that. So what's really happening is the market touched our highest area. You can see here we have the highest area, and the market also created that. So what we have is the market seems to be respecting that resistance. But what we have here is we might see a nice reversal towards this support area before we see another test. The market can come back and break that. It's possible. Or maybe the market will prove us wrong, and maybe the market will be coming around this support, maybe breaking out of that. Then we might see the market pushing lower. Plus, the dollar is getting the market is the dollar is losing some momentum. Maybe that it will be possible to see JPY breaking the support area. But for now, we're gonna wait and see what's really happening. If the market breaks, then we're gonna look for a sell. If not, maybe the market will continue on that uptrend. So AUD USD, I see someone said Kenzo, check USD USD. Sorry, AUD USD. Nasdaq GBP USD CAD. Okay. As we are on AUD CAD, we will go on the other pairs. So what's really happening on AUD? AUD, you can see that the market is now pushing to the upside. I think on the daily time frame, it was clear. So you can see that the market previously, it was pushing lower. It was pushing lower. So we had some breakouts. We also had some resistance there, but the market was going down. I mean, before. So another thing is we can just go on 4 hours time frame just to understand what's really happening. So from that, we can easily see that the market is now pushing to the upside. We had a very nice structure letting a very nice rejection as a retest here. Then the market created what? A higher low. Now it's breaking that. You can see a higher high here. Now the market is back again. So there is a chance that the market can still continue like that, continuing with higher high, higher low, higher high, higher low, higher low. So we bought there, we made something. So I think it's also another chance for us to do it, for anyone who trade AUD USD to also have something like that. Go do your entry nicely. I'm not saying go buy exactly. I'm saying the structure is good for something like this. You can have a nice buy pending order there and continue with this trend, because the trend previously it was pushing lower. Now obviously the market will be pushing to the upside. So if you get it early, the market might continue pushing like that for quite some time. So another pair, USD Canada, USD CAD. USD CAD. Okay, what's really happening? Yeah. On USD Canada, we had a very nice structure pushing to the upside when the dollar was still very stronger. You can see what happened. What happened before? The market was going up very nice. The trend was very straightforward. But now we saw a breakout. Now the market is about to do what? To continue going even lower. So we saw NFP, CPI, retail sales, not GDP, unemployment claims, they were all against the dollar. So which means the dollar lost some momentum. That's why we see other pairs trying to do it, to continue selling, to continue going lower. So we have a sell pending order here. Why? Because we expect the market to continue pushing even lower. So I see that you can see the market broke out here very nice. Or we can say here we had some retest. So now I see the market creating those structures, but I see a very nice downtrend here. I see the market creating that type of a downtrend. So actually on a bearish or pending, sell structure on USD Canada. We have a sell structure on USD Canada. I see CAD JPY. CAD JPY and what? AUD USD CHF S&P 500 USD. Okay, let me just go and do NASDAQ. NASDAQ and S&P 500 and US GBP CAD, because, and also USD CHF. So let's see, which one do we get here? USD CHF. Okay, I see USD CHF. It's here. I don't really like to trade USD CHF. The moves sometimes they're not really nice. So what's really happening here? I think the best way it will be going on a bigger time frame, just to understand the structure of the market. So on my side here, let's see, let me clear that. I think we are on a very aggressive sell. Let me draw that. We are on an aggressive sell. You can see there. On a daily time frame, we can see that the market is actually pushing even lower. So you can see that's why we see some aggressive sell from this resistance. So what we can do now is we can just try to go closer and see what we can get. But on my side, this type of a structure, it's a bit confusing. I don't think maybe I will trade this type of a structure, because the sell is aggressively pushing lower and there is no enough rejections. So what I see here is I see a continuation. The market tried to create a sort of a support. Here, the market continues selling. So on this one here, it's a bit aggressive, guys. This sell is seriously aggressive. So I don't really have much to say, but we are on a sell. Maybe you can wait for the market to push towards this resistance before maybe pushing lower, or maybe the market might continue selling again. So yeah. So let's go on S&P 500. S&P 500. S&P 5. Okay. So on S&P 500, I think the structure is quite straightforward. We had a very nice downtrend. You can see that the market was downtrending. Let me just use a nice daily time frame. You can see that the market was pushing lower. The market was going lower before. Now we have a aggressive push to the upside. But where we are on a bigger time frame, you can see actually the market is consolidating. This is a serious consolidation. You can see that the market is not actually going anywhere here. So what we can do, or what we can do here, what we can actually think about is, once the market is doing something like this, there is a chance that the market can still reverse. Maybe we can have a nice retest, as we did not really have that. Or maybe the market will try to break this resistance and continue to push the upside, as the market is now consolidating. So we just have to wait for the market to break this support or resistance. So now let's go closer to on a 4 hours time frame, just to see what's really happening. So since we saw that the market is broke out, so we see that we have a very nice structure. I can't say it's nice because this is just consolidation. So for us to be safe, I can say wait for the market to come towards the support area before you buy, or maybe wait for the market to break this resistance, then we can continue with that uptrend. Because mostly when the market breaks like this, we broke out of this downtrend, it means actually the market wants to continue pushing up. But with this type of aggressiveness, most likely we might get a nice reversal before we see a nice push towards to the upside. But since it's around it's summer now, so most likely we're gonna see some very nice push towards January there. Maybe January the market might try to reverse again, but for now I think the market might push to the upside. Nasdaq has been playing around also, but after a very nice push to the upside, the market did push to the upside very nice. We see that the market broke out of that downtrend. Aggressive move also, but this aggressive push, as I repeat, mostly when we start to see them not moving that much, we can see this type of a move is consolidation is quite different from what we see here. So mostly you can see that the market doesn't really have that strength similar to this area. So there is a chance for the market to do what? To actually push lower. Then after that, the market will have another strength to do what? To continue pushing to the upside. If not, there is a chance that, okay, the market can just nicely respect this support area and keep pushing to the upside. But I think since we did not really have a proper retest, I think that is coming. I think that it's coming. We understand that we are on a buy, so we are on an uptrend, very strong uptrend, but I'm expecting to see a nice reversal. If not, it means the market might continue pushing up very nice here. We might see a breakout on this resistance and we might continue pushing to the upside. So which pair again that you want me to check? Gold, we did gold. Oil, please. Oil, please. Okay, let's check oil. Let's check YTI. YTI is pushing to the upside. So what's really happening? We can easily see that, yes, the market was oil. It was pushing lower, which was actually a very good thing. You can see the market was pushing lower. We were selling. Very nice. Guess what? The market did change that. We see a very nice breakout here, which means we're going to see, let's see, we're going to see a very nice push to the upside. You can see we had a very nice resistance. The market is now breaking out. Obviously, the market is now going to try to push the upside. But before that, if you check closer, there is an area that the market might respect. Where we are now, we have this zone where it's actually a nice resistance. So the market might respect that and start to push lower. And if the market respect this type of area, which it means this was not a fake breakout. That was just an adjustment. The market was adjusting the trend. So it means when times goes on, we're going to do what? If the market respect that, we're going to draw it like that, as the market is going to continue with that downtrend. But we will wait and see if maybe the market is respecting that or not. So for now, we can just hold it like that. So if you know that you're not supposed to buy where the market is, because there is a chance for the market to respect this area. So if maybe you need to buy, it means it has to be above this resistance. So it's going to be your support if the market will continue pushing to the upside. Simple as that. So another pair, I don't know if maybe there is another pair. German 30. Okay, let's check German 30 and GBP JPY. Did we check GBP JPY? Oh, okay. I think we did not. So on GBP JPY, you can see that we are coming from a very stronger downtrend. Now we are pushing to the upside. So you can see that the market, it was very closer to the support area. The market is moving very nice. This is a very nice, simple, straightforward uptrend. You can see that the market just respected our support area. We had a very nice resistance just to make sure that we're breaking out of this smaller push to the lower side. So we pushed that. You can, let me just zoom that. You can see that we broke out of that area. Now we are pushing to the upside. Already we are we took a position there. We had a buy pending order. So yeah, it means the market is now pushing to the upside. But with this type of a structure, it's quite straightforward because the market just touched our support. You can see the support here. So we just have to draw something like that. If the market breaks, obviously we're pushing. Even here, it was quite straightforward. If the market breaks that, we're pushing. Even back there, so it was just simple to trade this. I'm expecting to see the market reaching around this 188.722, around that area. But just be safe if you're going to buy GBP, JPY. So let's see. I think now it's about to German 30. Okay. Can you give your thoughts on Dow Jones? Feeling it might be similar to the S&P. Yes, I think let's go on German 30, or let's say US 30 before we go on German 30. So on US 30, I think it's quite straightforward. Also, we have a nice breakout because the dollar, it was losing some momentum. I'm expecting to see the market pushing to the upside. But you can see that even though we are pushing to the upside, the market seems to lose some momentum. It's just consolidating, but at the same time, it's pushing to the upside. I think a buy is good. A buy is going to be good here. But with this type of a push, I'm expecting a reversal. You can buy unless if maybe you're not going to over risk. I think that can also work, but expect a reversal along the way before we see another continuation. I don't see the market maybe creating another another structure like that or candlestick like that, bullish candlestick like that. But yes, the market is on a bullish momentum, but a reversal, it's good. A reversal might happen actually, but yes, you can be on that. You can be on that. I think that can be good. So someone said GB working German 30. Yeah, German 30 is also on a bullish momentum, quite similar to what we see on US 30. So it's just a continuation, but this is aggressive push to the upside. But just expect maybe a sort of reversal. But I might be wrong. Just be careful whatever that you do, that the market can still do its own thing. So thank you.
Hey Kenzo, that was awesome. Thanks for taking over the show here for a little bit for us. And for those of you guys who are sticking around through this segment, I just want to say also, let's make sure to thank Kenzo by subscribing to his channel. We've got his link here being dropped in the chat for those of you guys who do not already have Kenzo on your YouTube watch list. Highly recommended, again, for that mix of technical and fundamental analysis. Kenzo, thank you for coming on. We'll give you your break now. I appreciate your commentary as always, and I guess we'll see you next week.
Thank you very much, man.
See you, Kenzo. All right, guys, and again, always good to have Kenzo on the show. He brings a nice mix of that technical and fundamental analysis components that we try and get more frequently on the stream. Some other notable people like that do that sort of thing are Frank and Ivan, and Gary does that as well. So it's nice just to have a rotation of people that have both the technicals and fundamentals going on the show. So yeah, highly recommend. Make sure to subscribe to Kenzo. Show him some love. Appreciate him for coming on as always. And guys, the pound USD trade that we were talking about earlier is actually still looking kind of good. If I take this trade, I'm going to share it inside of our Discord channel. I'm watching it really close. Watching how this candle closes here will be pretty key here. Well, actually, we had a candle close. It closed right at that support level that we discussed. So I'm going to watch this one and see if I can get an entry. And if I do take this trade, like I said, I will share it inside of our Discord channel. So just a heads up, that's what that looks like. We have all of our trades being shared. Frank, myself, Ivan, we share our trades in the group. Ivan also does coaching webinars for members, and it's been real popping in there recently. So if you're not already in the Discord, just a heads up, today is the last day for half off, and you get 50% off if you message us using the link in the chat right now. So if you'd like access to those signals, take advantage, pick it up. It's a one-time fee to join, by the way. It's one time you're in, then you don't have to pay anymore. And there's no like recurring monthly charges or anything like that. It's one time. It's like your ticket to get in the door, and then you're in with us. So come join us. Again, today is the last day, best price of the entire year. And that sale price is not coming back for foreseeable future. Definitely not the rest of the year, and definitely will be a while until we do that offer. That is our lowest discount of the entire year. All right, guys, we're going to take a quick break, and I'm going to come back and just chat with Frank for a second, see what he's got going on, and then we'll close out the show. So coming right back after this.
When your trade goes to the moon with Eightcap, this is what it feels like.
3, 2, 1.
All right, and we are back with the man, the myth, the legend. What's up, Frank?
Hey, how's it going?
Pretty good. Frank, what are you trading right now? Are you looking at indices still? And if so, what's your reaction to what's been going on?
So it's hard to say because on a technical chart, things don't look very bullish. Kind of looks like consolidated. There's a lot of just big swings either way, but yesterday we caught a huge swing to the upside. I took a trade on the S&P and it went pretty well in my favor, but it only came all the way back to where I was forced to just manually close. So I would like take some profit, but today kind of looks like the same. I don't really think that there's necessarily going to be a big bullish move today, but PCE numbers came in lower than last month, and that's a good sign for the stock market. And GDP numbers were also good. So just seeing the blend of good economic data and lower inflation, PCE kind of confirms or reinforces the idea that CPI is, continuing to fall. And I heard that this Thanksgiving was one of the cheaper Thanksgivings in a while because inflation had come down so much. So price of many things like the average Thanksgiving food was a lot lower. So cheaper prices is good.
Yeah.
And it's a good sign for the fundamentals in a market at least. But it looks a bit overextended as it has been for several days now. I think this is probably candle 8 of just hovering in the same spot over and over. And these two candles right here are not they're not promising, and it looks like there will be a pullback, but fundamentally things look good. I think we just may have to wait for the price to sort of figure itself out and come to a decision at some point. So yeah, I think in the meantime we're going to see either some consolidation or downside in the market, but a lot can happen. We have Powell speaking Friday, so not really looking at anything right now on the indices after my trade yesterday, but I'm still, I think I'm, oh no, I stopped out of EU as well. I was long euro dollar, and that came all the way back. So I think I'm just going to be waiting on gold, stocks, currency pairs like EU and GU before I start making a decision again. But yeah, the way this looks right now is some buyer exhaustion. We're looking at a slower rate of gains, and at the same time, prices just coming all the way back down to break even and just staying in this zone. So I am not going to look for any longs anytime soon, I would say.
That's fair. I agree. I mean, I don't necessarily think that, I don't see a catalyst just yet for a drop. However, this extension has been going for some time. We've had a huge run up on the indices side of things. And I think that it's probably due for, if not a pullback, right? A pullback by consolidation is also probably appropriate. Like even if it just goes sideways for a little while, some time to digest all of this gain makes sense. And I don't necessarily think it drops big from here unless something drastically changes, because all of the stuff that happened fundamentally to get us to this point, I think was valid. I think this rally was much needed in terms of earnings held in there. You see yields coming down, which was a big headwind for markets. They're up a little bit today, but overall they've been trending lower. That's been a nice bullish catalyst to the market. And by the way, for the dollar traders out there, always keep an eye. Frank and I point it out often, but yields are really important because, of course, yields are in some ways reflective of monetary policy outlook, et cetera. So yields coming down, that's been a nice, tailwind to the stock market and to the indices. And by the way, also gold, right? Inflation cooling has been a nice positive thing for gold. You mentioned gold earlier, Frank. For me, I'm watching it for a possible pullback. I like the 61.8. So if we get a retest to like 2013, I think that might actually be a bargain. And that's weird because you might have said over here, right? So this is like another example, as we were talking about, pullback by consolidation. Gold kind of went sideways for a little bit and then exploded again with more dollar weakness. So it's almost like, yes, it can look overextended, but if it consolidates and then breaks out again, momentum is a real thing in markets where, this thing might look overbought but it can go higher. And so I think it's still appropriate to wait for a pullback on gold, but I'm very interested in seeing if I can catch that pullback around the 61.8. So that's on my watch list. I think you mentioned gold. Where would you take gold or be considering gold trades?
So you said 61.8, but that's about the same level just because of that structure right there. So somewhere in that zone, I'm looking at like I think it's the 2010s level. This when you mentioned yields, so I pulled up that chart. I just wanted to point out, yeah. So the trend was overall up for this for quite a while, and then we saw a break underneath, structure like the trend line, lower highs, lower lows, and something I haven't really been mentioning yields a lot lately, but seeing this sharp decline, we're now at 4.6%. And earlier this month, we were touching above 5. So this is a pretty steep decline. I think that, we have overextended and, overbought, oversold levels on some things. So I think the pullback is really just somewhat of profit taking. There really isn't anything suggesting that the market is not strong and the economy is not doing well despite higher interest rates. And inflation is coming down. It's the same thing we've been talking about for a while now, but things run really hot and then they have to pull back and set up for another trade. So this could keep going higher. The rates could keep going higher, but overall it's touching lower lows. It's 4.6%, which it hasn't been at in a long time. So I think this is a good sign. And if we can see the 2-year dip below the 10-year, that would be a really good sign too. But I think the 10 years at like 4.3. So,
yeah, 10 years been really, the yield has really, really dropped on that one, which again, I think is in some ways, people going out more on the duration of yields or bonds is in some ways kind of good because it's like, people are a little bit more confident about the situation if they're going to buy a 10-year instead of buying a 2-year and just kind of parking money there. So yeah, I mean, to your point, I mean, there's 4.35% on the 10-year here today, and spiking a little bit, but this might be again the one to watch is the U.S. 10-year or U.S. 2-year, as Frank was looking at for the dollar index. If you're somebody trading currencies or even watching for indices, and I will say this has a really big impact on more interest rate exposed assets like the Russell, as we've talked about heavily. It also has a big impact on gold prices as well for the gold traders out there. So if this continues to spike, I actually think that, in some ways, Frank, that a bigger move up here could actually get us those entries on gold, right? So by proxy, the yields rising a little bit here today could give us an opportunity to essentially bet against yields going higher and potentially get long gold. So will be an interesting trade to watch out for sure. But Frank, we'll leave it there. We'll call it a day on the stream here. So thank you for joining me here to end out the show with the bang as always. And we'll see you on the next one.
Thanks.
All right. And guys, to wrap up the show, I just want to say this is our final call for the Discord VIP or the Edgefinder. If you are somebody who's been watching, this is the last call for the half off today only 50% discount off of the Edgefinder or the Discord. Again, final call is in. Message us right now if you want half of the usual prices before they go back to their usual prices tomorrow. Take advantage. Click this link. Come join us in the Discord. We've got 2024 ahead of us. It's a one-time fee to join our Discord or to get access to the Edgefinder. So if you take your trading seriously and you're looking to get into the right group, or you want tools to level up your trading and get access to, of course, the COT data, if you want to look at the retail sentiment data, seasonal trends, if you want to look at money flow from institutional money, take advantage of the half off sale before it ends and it goes away for the rest of the year. Again, all you have to do, shoot us that DM on our website, a1trading.com, click the live chat, and let us know that you would like that 50% off discounted price before that sale ends today. So with that said, we'll leave it there. And thank you guys all for watching the show. What a wonderful list of people we had on today. We had Kenzo, we had Miko, Marco, Frank, and of course, James and Chandler putting it all together on the back end producing side. So thank you to everybody who was involved in making the show. And thank you to you guys in the audience for being here, which is what allows us to do this show every day. And finally, while we're on the thanking people trend, we'll thank our sponsors, Eightcap, FX2, and coming back, we've got Forex Tester. So we've got some wonderful sponsors, audience, and participants, guests. It's been awesome. So with that said, we'll see you back tomorrow for the next show. See you guys.
Thanks again for flying with us on the A1 Trader. Our goal at A1 Trading is to give you the latest in market news through our daily videos and articles. Take advantage of our huge Black Friday sale, 45% off, happening all month on our best products we have to offer. A1 Trader, prepare for the return home.